Welcome to the most important video you can watch in a trading career. Now, a lot of people are going to skip this video because they think they understand candles, and I promise you, you do not understand candles the way you believe you need to. And if you're a beginner to trading, I highly recommend you start here as a cornerstone and the foundation of your trading career. The reason why is because whether you open up a crypto chart, futures chart, stock market chart, forex chart, they all have candlesticks. So a lot of people skip the first step of understanding candlesticks to the T, not understanding they literally tell you who is in control. And so therefore, in this video, guys, we're gonna break that down. So if you're watching this video all the way through, you will understand something that a lot of people will not. So let's get right into it. The mindset of candles that you need to have is the fact that all it is a game of buyers versus sellers. That's all it is. And as traders, all you need to do is identify who is in control and make a trade based off of that. And with understanding that the game is just buyers versus sellers, it helps you understand price action, because that's all candlesticks is understanding price action, because candlesticks is showing and representing the value of the price. So again, I'm going to keep this very simple, but I'm also going to be very beginner friendly and go from the beginning and then go to advance in this video. So in the beginning, I'm going to break down what candlesticks represent and how to spot the opening and closing and what these wicks represent. And then I'm going to get into depth on how to spot who is in control. So two topics we're going to cover, guys, is the breakdown of candles. I'll be showing you guys how to understanding the opening and closing, what these wicks really represent. Because honestly, again, guys, a lot of people think they understand candles, but they don't know them to the T. They don't know what they represent and how to spot the reversals, which is why the second topic is going to be the reversal candles. Focus on what the candlesticks are showing so that you can understand where the price is headed towards next. Because candlesticks also help you towards understanding not only price action, but the momentum the market is heading if you can read price action. So let's get into the breakdown of candlesticks, and please, even if you believe you're advanced, I highly recommend you stick to that as well. Because all we're looking for is who is in control. That's the whole point of candlesticks. So not only is understanding the body important, but the most important part is understanding what this is here. These long, skinny, what are called wicks. So let's get right into it, guys. So we're gonna start fresh with just a clean example of candles. Very simply, on the green candle, typically we understand the price goes up, as well as when we see a red candle, which means bearish, we say the price goes down, very simply. But first, we're gonna focus very simply as well on a bullish candle, or really, AKA a buyer candle. That's really what it means. Whenever you hear somebody like me even say a body of a candle, that just means the body, the big block, to keep it real simple. The bottom of a green candle represents the opening price. So let's just say, for an example, the opening price is $20. You can see there are many different examples, many different times price opens at different areas, which is not too important right now. We'll go into a live chart later. But again, the bottom of the candle represents the price the candle opens at. Keep that in mind. Because if this is $20, price is going to climb to, let's just say here at $40. The top of the candle is where the price closes at, guys. So again, this is the opening price. Let's just say it was 20. The top of the candle is where the price closes at. Let's just say it's $40. That means the price opened at 20, climbed all the way to 40. Very simply. Therefore, that candle is called a bullish candle, or what I like to say, a buyer candle. Because really, all that means is buyers had stepped in. Buyers had took the price from an opening price of whatever, for an example, $20 again, and took it all the way up to $40. So really, buyers stepped in and took the price on higher from what it was at previously. So now let's move on to the bearish candle, or AKA the seller candle. Now, again, the body is just the inside of the candle. The only difference is the price is going down, guys, on a red candle or a seller candle. That's really what it means. Therefore, that means the opening price is at the top of the candle. Unlike over here, it was at the bottom. This one is at the top. Price climbs on down, and this is the closing of the candle, guys. Since it's a red candle or a seller candle, that means the price opened at the top and sold all the way off to the bottom. So let's just say up here it was $40. Price sold all the way down to $20. Again, there are different shapes and sizes in candles. We're not going to judge. And here's an example of some very simple different sizes of opening and closing candles. There are times where the price opens and closes real tight, which we'll go over that later on. Right now, I'm just showing you guys how to understand candlesticks. So very simply, we broke down bullish and a bearish candle and what the bodies were. So now we understand bodies. On a bullish candle, that means the price goes up and it closes above what the previous price was at. Basically just the opposite on a bearish candle. Again, price opens at the top and closes on down below because the price is climbing on down. So now we understand what the body is on a candlestick. Now we're going to get into what is something called the wicks, which is so important and probably the most important thing you can ever understand on a candlestick, because guys, this is what we're also focusing on as well. Wicks is what they're called. Highs and lows. But first, let's focus on the bullish candle here. So we already understand what the bodies are, but a wick just means the highest point that the price climbed to. That's all it means. As well as whenever you see something like a wick to the downside, all that means is the lowest the point the price has reached. The only difference is, guys, is price still opened and closed right here. What does that mean? That means at one point, the price opened at $20, let's just say, for an example again, sold off a little bit to, let's just say, $15, then climbed all the way up to, let's just say, 45, and then went all the way back down to close at 40. That is what that's what price can look like represented of a candle. Opening at 20, climbed all the way down to lowest point of 15, went all the way up to 45, and then closed here. Boom. Candle closes. That's what that candle represents. Pow. There are different sizes of wicks again. Let's briefly go through these quick examples. Briefly. And the reason why it is so important to understand the wicks and where they're at on these candles is because of this, guys. Look at who is in control. Look at this first example here. Buyers are fully in control of this candle. Why is that? Because buyers opened it and immediately no downside action, no sell-off at all, just a straight push. Sellers didn't step in. It just straight pushed and closed here. Nice. Buyers are in full control of that candle. That's what that represents. Then on number 2, guys. Why is this also a very strong candle as well? Reason why is because, again, sellers showed their strength, but buyers outperformed them. Why and how can you tell that happened? Well, let's break it down, guys. Let's check this out. This is probably the most important candle you can ever understand in your trading career. A hammer candle, which we're going to go over later on. Price opened here. Let's just say $20. Sellers try to sell it off all the way down below here, but then buyers immediately took control. Brought the price all the way back up here and closed it here. That is a strong candle, and that is this candle here. Again, it's telling you who is in control. Why is this candle a indecision on the market, or it's undecided? Nobody's really sure. It's really not that strong of a buyer candle. Let's go over it, guys, because this is a very important candle as well. Reason why this is not that strong of a candle is because of this. Price opened here, let's just say again, $20. I like to use that $20 of opening as an example. Sellers sold it off a little bit. Buyers stepped in a little bit. Sellers took it back off a little bit. And then just price closed around here. Really not much action. Again, price action. Really not that much action being told here. Buyers and sellers aren't really too sure. So that's why they call it an indecision in the market. They're not too sure on who is really in control there. But then you got this candle here, number 5, which is very important candle to watch for, especially if you're bullish or going long or taking calls or in a position to the upside to make money when price goes to the upside. Reason why this is a very important candle to watch for, or in general, understand, because again, all this is representing price actions, because read it. Buyers were in control, but sellers rejected them. How and why can we understand that sellers rejected them? How do we know that? Well, again, price opened here. Let's just say $20. Buyers tried their absolute best to take it all the way up. Let's just say $50. But ultimately, sellers rejected them, meaning sellers sold the candle all the way off and the price closed here. Very close to the opening price. At one point, they were way up here. But what happened? Sellers sold them off. So that's why, again, it's so important to understand the game of buyers and sellers, or understand aka price action, which is candlesticks. So I just took you guys into a little bit of an interdimension, quick lecture of understanding wicks. That was probably the most important couple minutes of your life right there, just off of what I just went in, off of these 4 examples, as well as showing you the who's in control chart. We're not even finished, guys. We're going to focus on the bearish side. So again, same thing. It's the highest point as well as this is the lowest point. All that means is that at one point the price climbed all the way up here, and at one point the price climbed all the way down here. So again, who's in control on these ones? It's the bottom half. Sellers are major in control here. Why? And how can we know? Because again, the price opened here, no buyers took control and try to bring it on up, immediately sell off. No buyers try to buy it on up and bring a little bit of a wick, nothing trying to create this, it just closed here. So it's a very strong seller candle. Sellers are fully in control when you see a big fat candle like that. Now this candle here is a representation of this one here. And let's go over this one again. Because check it out. Sellers were in control, but buyers rejected them. How can we tell if buyers rejected them? How do we know? Well, where did the price open at? The price opened up here. Buyers took a little bit of control. Sellers sold it all the way off down to this very low here of the wick. Then buyers took control and closed it here. That is a long wick. Whenever you say a long wick to the downside, that indicates buyers took control. Because again, price opened up here. Sellers sold it all the way down here, but buyers said, nope, we're buying it all the way back up, and boom, we're closing it here. That's what that candle represents, guys. So we just broke down not only the candlestick's body, but also as well as understanding the wicks, which is the high point and the low point. Again, the lowest point just represents the lowest point the price climbed to or down to. The highest point just represents the highest the price climbed to. The bodies represent where the price opened and closed at, guys. Understand that. There's bull candles and there's bearish candles, aka buyers, sellers. So now we just broke down candles. Let's get into reversals, guys, and play around with these candles examples. Understand and read. There are plenty of different candles examples in the market every single day. Some candles have a major long wick. Some candles have no wicks at all. Some candles have very interesting setups. So again, watch candlesticks and read them and understand them to the T. Now we're going to get into reversal candles, which is probably the most important as well. Reversals candles are what I look for. First, we're going to go over the bullish engulfing. There are plenty of different examples of reversal candles. We're just going to go over a few of them that I like as well. A bullish engulfing needs to happen when there's a downtrend, guys. It's very important. Typically, you see a bullish engulfing on a downtrend. That's usually when you guys are going to catch the reversal, aka a bullish engulfing or a reversal in general. When price is trending on down and you see a big major buyer candle step in, that's typically when price is going to reverse. Not always, but again, this is how you read candles. So for an example, boom, bullish engulfing hits, price climbs on up. And that is how you can spot a bullish engulfing. And here's one example on SPY on a 15-minute time frame on an actual live chart as well. Now, there's something called a bearish engulfing, which is just the opposite of what we just went over. It's when price climbs on up, then you get a big sell-off candle representing sellers are stepping in, and price climbs on down. Which again, here are two examples in one. Climb on up, bearish engulfing steps on in, climbs it on down, boom. Bullish engulfing steps on in, boom. Strong buyers step on in and take control. That's very simply a bullish and bearish engulfing. Very simply. That's not even us going on the live market to show you guys plenty of examples. Now, of course, not always they're going to hit or always going to exactly reverse. That is just how you guys can spot reversal potentials as well as understanding price action in general. Now, here are my favorite set of candlesticks. Hammer candlesticks. Now, honestly, these ones hit very hard when they come around. Remember, all you're trying to identify is who is in control. That's the whole part of the game. Usually, hammer candlesticks are on downtrends. The reason why it's a hammer is because, again, price opened here. At one point, this was a major red candle. Price was climbing on super hard down here. This was a major red. And then buyers took control. Took it on up, closed it there, and boom. It kept on climbing, guys. Now, where you want to spot these hammer candles is on a support level. You don't want to just take a hammer candle the first one you see, guys. Just because you see a single hammer candle in the market does not mean it's going to immediately reverse. They are more powerful when you see a hammer candle on a support level, especially being a higher time frame. We're going to get more into that as you guys watch this program and watch the support and resistance level and how I trade those using candlesticks. As well as, let's just say for a quick example, guys, let's say this level here that I marked off, which maybe if you're too new, maybe you won't understand what I'm about to say. But let's just say this level that I marked off here is yesterday's highs or the high of yesterday. But then price comes on down to retest that previous day's highs and a hammer forms. That is when you actually want to enter in for a reversal, not just when a hammer is just spotted in the middle of the market out of nowhere. So here's an example on SPY on the 5-minute chart of a hammer. Again, in the middle of nowhere. You usually want to find these hammers at a very nice support level, whether it's previous highs, a nice support level low, a nice general range, whatever it is, guys, a Fibonacci retracement level, and you see a hammer level. That's usually when you want to use these hammers to your advantage. which will go more in depth here at the end of the video going on a live chart. Here is another form of a hammer that is still represents strength in buyers. Now it's not as strong as this green one. Reason being is because price open here, sellers stole it on off really hard. At one point this was a major red candle and then buyers took it on back up and closed it here. That's why it's decently strong. It's not as strong as this one, but it's still a hammer candle. Now what you're looking for is the wicks, guys. That's what you're looking for. So again, let's just say for an example, let's read some candles here. Bullish engulfing takes control. Price tries to stay on up. You got a nice downtrend going on. Break back above this most previous highs. Then you guys can see your hammers start to form, guys. Hammer candles forming. Boom. Buyers stepping in. Still, more hammers are forming. They're trying their absolute best to take on control. Then another major hammer forms here. Inverted hammer. Boom. Takes control. Still holding this general area of support of the most previous highs here of this most recent area. Big buyer candle. And that is how you want to read candles, guys, because that will help you identify potential reversals back to the upside as well. So we just went over quick hammers. Now we're going to go over bearish candlesticks. Reversals back to the downside. So here is a shooting star candle is what they call it. But again, the names you don't need to really necessarily need to care about as much as long as you understand what the candle represents itself. Why is this a reversal candle back to downside? Because again, buyers take control. Then price open here. Buyers tried their absolute best to take control all the way to the tippity top here, but then sellers sold it all the way off and sold the candle down here. That is a reversal bearish candlestick. A shooting star is what they call it. As you guys can see here, price climbs on up super strong, then sells off here super strong. So as you guys can see here, shooting star at the very tippity top. Buyers try to take control immediately. Sellers step on in and they sell it on off to the downside. And so now we're going to get into something that they call doji candlesticks, guys. Now these are very interesting candles, something to look for, as well as they're still neutral type reversal candles. Now I call them neutral because really they don't represent really much. But honestly, these are still reversal candles, especially when they're at the tippity top of a trend or at the bottom of a trend, guys. And we're going to go over in depth here shortly in a live chart to show you guys as well. So again, these are what doji candles look like. Reason why is because the opening and closing price is just very thin, guys. That's why they're called doji candles. I don't make these names up, but again, that's what they're called. There are plenty of different types of dojis, but again, the names don't really matter necessarily themselves, but you guys can see the different sizes and shapes they have. There are plenty of different dojis everywhere, but you guys can see the price is just getting tight. So long wicks to the upside, very long wicks to the upside. You can almost even call this a shooting star, or if you want, a gravestone type doji. And then again, sellers immediately took control and sold it on off. There are plenty of different type of dojis in the market. All they mean is just prices getting tight or neutral. Not sure who's in control, but ultimately, if you really understand candlesticks, then you can understand who is really in control, in my very honest opinion. Because again, look at the price getting real tight here, doji, then buyers to control. Let's say you missed this. Then again, you watch price climb on down. You see a little bit of a higher high situation here or a higher low situation here, what I really mean. You can almost even call this a hammer, but really it's a dragonfly doji. Don't necessarily need to matter on the name. Just understand what the price is telling you. Buyers to control, another long way to the downside, and boom, climb on up. Again, doji candle, but I wouldn't necessarily matter on the name as much. Because really, look at the long wick to the downside indicating that buyers to control. Boom. Then again, another hammer type candle, another indecision type candle. Boom, buyers to control. Then a classic doji, a very simple indecision, not sure who's going to take control in this one. And then boom, sellers to control. Then again, another doji type candle, guys. Plenty of ways to spot different reversals, and that's all I'm trying to show you guys here in this video as well. Just reading candles, not even including trade setups, not even including patterns or however you plan on trading the market later on in life. This is just all based off reading candles. If you implement candlesticks in your trading, guys, you can understand who's in control. So again, here's another example of a cheat sheet of plenty examples of different patterns in the market just using candlesticks, guys. It's not even including a trade strategy that you're about to use. This is just reading candlesticks itself. So now we're going to go into the live market and show you guys how to understand who's in control based off trading different trade strategies, whether you trade breakouts of previous highs or just in general. We're going to read price action, show you guys what I mean. Let's get right into this video as well. Let's very simply read this day's price action, which is the 5-minute time frame, which means each candle represents 5 minutes of price action. So at 6:30 a.m. the market opens, first 5 minutes of market open. Here's what happened in the first 5 minutes. Then 5 minutes later, another candle forms, opens and closes, creating price action. And again, guys, well, I'm gonna show you guys how you guys can read this. Mind you, This is without adding any levels in the market or using any tools such as Fibonacci retracements, if that's what you use, or other various ways of trading levels. This is very simply just strictly reading candlesticks. Now imagine, like I keep saying, in the future, using this to your advantage down the road when you finally learn and use support and resistance levels. Using candlesticks to your advantage will generate you a lot more profits, as well as even help you with entries, guys, and even also identifying where the price is going next. Right off the bat, first 5 minutes, market sells off very strong. Don't get me wrong. Big sell-off candle, very strong sell-off candle. Then buyers step on in, take control of this candle, and close right here at 671.42. Then the next candle opens, sells off just a little bit, guys, pulls all the way back up, and buyers take control yet again and close here. Look at this candle here, guys. Mind you, opening price was here, sold off, buyers try to take it on back up, don't even get to the most previous opening price of this candle here, and sell off here. Guys, what is this? This is considered almost a bearish engulfing. The candle almost completely engulfs the most previous one. Then look at the tug of war here, guys. Look at the tug of war here. Buyers try to take control, sellers take control. Price is getting very tight, very tight. Now, again, reading candlesticks, guys, what can you guys tell me from here? Again, this is very important because a lot of you guys and a lot of traders, what I see is they don't use candlesticks to their favor. They just see something like this and they don't think that if you just read the candlesticks, they can actually help you identify where it's going next. So, sellers took control on the last candle. Buyers try their absolute best one more time. Sellers take control there and ultimately close at a doji candle, guys. We just learned what that means. That's essentially a neutral candle, an indecision in the market. They're uncertain and unsure where they should take it next. But look what happens on the next candle here. Again, buyers try to take control. Ultimately, sellers sell it off, and even more worse. But again, sellers are majorly in control at this point. Although it's a doji candle representing indecision, ultimately, look at this long wick to the upside. At one point, buyers were major in control. This was a big green candle, but ultimately sellers took control and closed it on below. Then look at this candle here, guys, a nice seller candle, closing below all this price action here, which is very solid. Because look at what buyers try to do one more time. They try to buy it on up. Sellers take control again because they're very aggressive. And guys, mind you, this is not even using levels yet. Mind you, you're going to be learning how to use and find levels like such as this called pre-market low, where once reading these candlesticks, you can see it breaks below a support level or even those previous candles here, which we could even draw a very simple support here. Again, look at this. Look at the price action, guys. Buyers try to take control, ultimately bearish engulfing, guys. This is a bearish engulfing candle, completely to the T. To the T. Again, I'm just reading candlesticks, guys. This is not even implementing other various forms of trading. This is just simply reading candlesticks. If you're somebody who trades patterns, if you're somebody who trades inverse fair value gaps, if you're somebody who trades open range breakouts, this is literally how you can understand who's in control, where it's potentially heading to next in your favor. And again, guys, bearish engulfing here. This is a bearish engulfing. It's going to get very technical here, but again, bearish engulfing. Look at this candle here. This is called a retest. This is where ideally you want to enter for the entry, because at one point, because this is the bearish engulfing, indicating that it's about to reverse to the downside. It's going to continue to the downside. You've been reading the price action. You've been seeing sellers are completely taking control. Every time buyers try their absolute best, sellers completely take control. And in this case, we get a bearish engulfing here. Then buyers try to absolute best one more time, but ultimately sellers take complete control, guys. And again, all I'm doing is just reading candlesticks. Boom. Sellers, indecision type candle, sellers still taking control. And guys, pay attention to the wicks. Again, what are the wicks telling you? The wicks are telling you that at one point, buyers tried their absolute best to take control again. Boom, sellers took it. Buyers try to take control. Boom, sellers took it. Buyers try to take control. Boom, sellers took it. But guys, this is where the flip happens. This is where you can spot reversals again. Look at this very strong buyer candle, not even including volume, not even including other potential areas of support that this could be hitting, not even including just looking at higher time frames, just very simply reading candlesticks, guys. Look at this major buyer strength hammer candle. Buyers were trying their absolute best to take control, but ultimately sellers kept taking control. Even if you don't enter on this candle here, or buy calls, or enter longs, or believe that you can enter a trade for the upside here, even if you miss this candle, again, all you have to do is just read price action. This candle is indicating a potential reversal, aka the hammer candle that we just learned. Boom, hammer candle hits. then again, all you got to do is watch the price action. In this case, what I mean by price action is candlesticks, because candlesticks are representing the price. So boom, buyers take control here. Again, sellers try to take it a little bit, but buyers ultimately close strong. But guys, look what happens here. Buyers are still trying their absolute best. Sellers sell off a little bit, creating a small body, and then look what happens, guys. Look what happens. Now, I know I didn't go over this pattern in the candlesticks, but if you just read what this very simply is, you can call it a tweezer top, which is what it is. You can call it a bearish engulfing. You can very simply just say sellers took control here, because look at buyers try to take control, and they did. But then now bearish engulfing, sellers take control, and now it's starting to reverse. You can see the wicks are indicating that buyers trying, they're trying, but boom, sellers take control. And every time they hit this general area of support, guys, you can see again, long wicks to the downside, indicating that buyers are trying to, but ultimately sellers keep taking control until this candle here starts to turn green, creating a big, massive doji, starting to take control here, indicating long wicks to the downside, a little bit of a decent body, and boom, they take control massively. But again, look what happens here, guys. Another bearish engulfing, or if you want to call it a doji or a bearish engulfing tweezer top, it does not necessarily matter. The point is that you read the candlesticks and show you and tell you where they're heading, guys. Look at the sauce here. Look at how much sauce is here, guys. These candles are literally telling you that buyers try to take control, sellers took control. Buyers tried a little bit here, and they did try to take it up, but boom, sellers took control. Buyers are trying, boom, sellers took control. And look at how much time sellers keep stepping on in. But then boom, every time, guys, every time we hit this general area of support, buyers are trying to hold it. But ultimately, you can see again, on this candle here, buyers try the absolute best. Big, massive, strong candle, gets above the most previous candles here. But ultimately, they try to buy it on up, and then boom, sellers took control. Boom, sellers took control. They try it one more exact time. Low volume, again, this is not even including what you're about to learn later on, which will help you determine the momentum. And again, because guys, we haven't even learned volume down here, but if you were to add volume, then you can see there's really not that much buyer volume. So even though they're trying to step in on the candlesticks, there's really not that much buyer volume. So again, you will learn that later on, but just reading candlesticks, you can see they try to take control. Boom, massive bearish engulfing. Sellers take control. Buyers are trying it just a little bit here, but again, another sell-off. Guys, look at this cluster of candles here. Reading candlesticks, you can genuinely tell who is taking control based off the candle closes. Sellers take control, big buys. Big sells, big buys. Try to take it on up, sell off, try to take it on up, sell off, boom. Sellers and buyers again. Buyers here. Boom, big buy, guys. Look at the rockets on up. And guys, again, look at the long wicks to the downside, indicating buyers are taking control. They're stepping in. Every single time sellers try to sell it off, boom, buyers step in. A little bit of buyer candle, boom, sellers step in, boom, buyers take control. Sellers step in, boom, buyers take control. Sellers step in, boom, buyers take control. That is how you very simply read candlesticks, guys. Look at this. We just dissected a whole day. Plenty of trades you could have taken, plenty of ideas, plenty of momentum, just reading 5 minutes candlesticks, guys. And I don't even enjoy trading the 5 minutes. I actually enjoy trading the 15 minutes. But guys, I just dissected a full day here, a full day. So I hope that helps some of you traders. Now, understand this. What I just showed you guys was just very simply reading candlesticks. This was not including adding volume, which I highly recommend to learn, which you'll learn here eventually soon in this Discord. Learning how to set levels, whether it be Fibonacci retracement levels, whether it be zones, support and resistance, any type of very strong levels, as well as using candlesticks in your favor, guys. I promise you, you will learn how to find proper entries, because let's just say, for an example, let's say you're somebody who trades open range breakouts, the first 15 minutes of open range breakouts. Now, I know that's very advanced, but again, you'll learn that here eventually, just sticking around, hanging around day traders, or being a part of a community that teaches about day trading. And again, guys, very simply, if you're somebody who trades the open range breakout, which means you grab the highest point of the first 15 minutes, so the highest point here, and the first 15 minutes, which means the first 3 5-minute candles, because 5, 10, 15. So again, you extend it and grab that low point there, which is this wick here. And guys, again, look at this. If you're somebody who trades open range breakouts, whether you missed entry here, because this is essentially a breakout candle, the retest here, so break and retest strategy, whether you missed that trade here and missed to enter puts to the downside here, or shorts, whatever you want to say, here is another possible retest entry. Now, again, if you're somebody who gets a little bit scared, you see buyers stepping on in, the potential entry that you can take is when you see something like a tweezer top, then you'd enter. Then again, you see it kind of come around this general area and it's probably not an entry, but again, that's how you can very simply trade. Now, there are many different kinds of strategies, of course. Whether you're someone who trades patterns, it does not matter. Whether you're somebody who trades pre-market low breakouts, again, there are plenty of different ways you can trade the market. But what will never hurt you and what will always be in your favor is if you learn how to read price action. And all price action is, again, is candlesticks, because candlesticks is representing the price. And a lot of traders I see step away from that. They don't learn candlesticks. They don't know when to enter a trade. They don't know when to get out of a trade. They don't understand where the market's potentially heading. Guys, learn how to read candlesticks. So I hope this helps you guys, and I'll catch you guys in the next video on the next learning session, guys. If you guys have any questions about this, DM me, message me, or add me in the chat.